I'm curious. So we have a chart here I want to show you. Why do you think the average retail investor does so poorly in the markets?
That's a good question. I'm trying to think whether it's actually true from my perspective that the average retail investor does poorly. So, because we publish
Thanks.
we publish Robinhood data around this. We have the Robinhood Investors Index, and that tracks how our customers do relative to the market, also what their top 10 holdings are. Um, and, it fluctuates quite a bit. You can compare it against QQQQ and other tech stocks and ETFs. And our customers tend to be overweight in innovation and technology and also crypto. So in times when those do poorly, which happens from time to time, our customers tend to do less well than the indices. But, in times like right now where innovation, technology, crypto is doing well, they tend to do very well. So um, I think that historical number might be, if I had to guess, from a time where there were commissions on every trade. And a lot of the studies that show retail investor underperformance assume a $10 commission. And obviously, that amount eats into your returns as you trade more and more. The difference is now we have zero commissions on equity trades. And so a lot of those analyses don't make sense. And I think a lot of the conventional wisdom around retail underperformance has been under these sort of antiquated assumptions.
Is there anyone you think that should not be investing? Is there a type of person maybe where, hey, this is probably not for you?
What we try really hard to avoid is people investing in things accidentally or things that they don't understand. So I think disclosure is very, very important. It should be clear to the user what the instrument is. I mean, it should be clear that, for example, it's a cryptocurrency. It should be clear if it's equity or some type of leverage product. If they want to trade options, it should be clear that they're suitable for options. But once you get to that, if someone's really telling you, I want to invest in this IPO or I want to trade options. I think it's hard for me to imagine a world where I would say no. You shouldn't be doing that.
So you created Robinhood, the financial app that introduced probably millions of people to investing that would have never been investors otherwise, with $0 trades and a very beautiful UI. While that's really good, because I think everyone should be investing. If you're not investing, I think that you're losing out and you're not doing your future self a service.
Yeah.
There's also the counter side of that, which is it could introduce some people that are not super knowledgeable in the markets or don't have the expertise to be investing, and they can end up losing money. Do you think that there should be stronger guardrails and stronger disclosures in place to prevent people without the knowledge to be investing? Or do you think it's a better thing that everyone just kind of goes in and it's, the survival of the fittest?
I think that more people should be investing. We give people lots of options now, right? So obviously for our active traders, we have to be at the frontier there, and you can trade options, futures, prediction markets. I mean, we pride ourselves on having very comprehensive selection, low fees, rock bottom margin rates for the active trader market. But not everyone wants to actively trade or is suitable for it. And so we have Robinhood strategies, which I think is the best digital advisor on the market, with some of the lowest fees in there, a fee cap if you have above $100,000, and just like a beautiful interface. And that's been off to a fast start. We rolled that out just a couple of months ago, and it's already at over $500 million in AUM with 100,000 customers. So it's growing quickly. We also have retirement. We've got over 20 billion in retirement assets on the platform. To my knowledge, I think it's the fastest growing IRA product that I've heard of, gone from 0 to 20 billion in just a few years. And if you look at what we incentivize, retirement is actually what's incentivized because there's a built-in match into the product on every contribution. So we'll match 1% for retirement and 3% if you're a Robinhood Gold member. And, we run match promos and things like this, but if you actually think about what's like intrinsically incentivized, it's our retirement products. And I think the true story is a lot of people have money in different buckets. So you'll have someone with, a few $1,000s, maybe more that they're discretionary trading, and then they'll have a big retirement portfolio, and they'll use Robinhood strategies as well. So if you think about the discretionary bucket, the sort of like area of the portfolio people are self-directing, taking risk, I think I've always viewed that as sort of like competing with the consumption bucket. So this is probably money you would have spent otherwise. You'd have spent it on entertainment. You maybe would have like bought stuff on Amazon. And that's what we saw from the very beginning when we were looking at Robinhood and where the money that these young people were investing was coming from. It wasn't usually coming from another competitor because Robinhood was their first account. And when we talked to customers, they'd say, if it wasn't for Robinhood, I wouldn't be an investor. I'd probably be spending this money. And so Robinhood actually, I think, took money from the consumption bucket and put it in investing. And I think when you take that lens, that discretionary bucket looks a little bit different.
That's what I tend to agree with, is it seems like Robinhood kind of took those people that would be spending it on extra streaming services or spending it on random luxury goods or things that they don't necessarily need, and they put it into, usually with Robinhood, the old connotation, I don't know exactly how it's being used now, was that they would put it into like slightly riskier stocks or more fun sort of investments, which is, I still think, magnitudes better than just spending it on some random, extra expense.
Yeah, and I think also a lot of the people that really, like there's some customers that are all in on discretionary trading, right? They trade options, they trade futures. And you talk to these people and they're basically entrepreneurs. A lot of those folks are entrepreneurs, right? And we have meetings with them and sometimes we do dinners with our best customers. These people want complete control over all of their finances. They have very strong points of view around many things. And I think that Robinhood and trading is a way to reflect that point of view. They think certain companies are going to do well. They feel like they deeply understand cryptocurrencies. Some of them are sports junkies, and they have like an incredibly deep understanding of different sports teams and what's going on. They're tracking the injury reports. So I think there's a big parallel between self-directed trading and entrepreneurship. If you think about me, very few entrepreneurs actually succeed. And if you think about what it is, it's like a complete 100%
high risk
leveraged bet on like one undiversified thing. Should we have less entrepreneurship? I don't know. I think we should have more, even though, it doesn't always work.
I did a short recently that got a lot of views, and it was on Robinhood.
Oh, gosh. It wasn't the one where you're like, I'm closing my Robinhood account. Here's why. Was it?
No. It was this one. Turn it up. So I bought Robinhood stock at $32 a share.
Okay.
And it dropped as low as $7.
Oh, I saw this.
Doubled down, and I bought more. The reason it went down was because I told Jack
Yes.
that I bought Robinhood.
I saw this.
He immediately goes on his phone, buys it. Immediately. And I kid you not, the day he bought it.
Once that's a 10.
And I told Jack on the podcast, I'm like, dude, you got to sell the stock. And he says, I'll flip a coin, and if it's heads, I'll sell. If it's tails, I'll keep it. I said, that's fine. He flips it. Sure enough, he has to sell the stock. He sells the stock. The next day, it's up 10%.
Dude.
The next day, there was a big announcement that they received an investment.
At first, you were telling me kind of a joke, but you genuinely believe this.
Yes.
I actually came across that clip on social media, and I was expecting like some very deep fundamental or technical analysis about your investment philosophy. So it gave me a little chuckle. It just got funnier and funnier as it went along.
Honestly, my only analysis was that I genuinely like Robinhood as a company, and it's all I see on social media, on Wall Street Bets and on Twitter. Everyone just posts their Robinhood screenshots.
Yeah.
And very few people ever post Schwab. And I thought just by the metrics of that and the price it was trading, it made sense to me. And then Jack bought.
Yeah. So I'm curious, if you map out all of the users on Robinhood across a line, and this is like people that make a lot of money, high risk, people that lose a lot of money, high risk, and then in the middle, you have like the very conservative investors. Where would you say Robinhood falls? Like, what does this chart look like on Robinhood as opposed to other brokerages if you take Vanguard, for example, or you take Schwab or any other sort of exchange?
Now, really quick, every business is asking themselves the same question. How do we make AI work for us? The possibilities are limitless, but guessing is too risky, and sitting on the sidelines is not an option because one thing is certain. If you're not doing it, your competitors are already making their move.
And that's where our sponsor NetSuite by Oracle comes in. It's the #1 AI cloud ERP, trusted by over 43,000 businesses to manage everything from financials and inventory to commerce, HR, and CRM, all in one unified system.
When all of your data is in one place, your AI becomes a lot smarter. It doesn't just guess. It knows. NetSuite intelligently automates routine tasks, delivers real-time insights, and helps you make fast, confident decisions that actually help drive growth.
And it's not just an add-on, it's AI that's literally built right into the system that runs your business, helping you cut costs, improve accuracy, and stay ahead of the competition.
Whether your company is making millions or even hundreds of millions, NetSuite gives you visibility and control to keep moving forward. Honestly, if I were building a business of this size, NetSuite's the only company that I have 100% confidence in.
So if your revenues are at least in the 7 figures, get our completely free business guide, Demystifying AI, at netsuite.com/clips.
Again, the guide is free for you at netsuite.com/clips, netsuite.com/clips, with the link down below in the description.
Where would you say Robinhood falls? Like, what does this chart look like on Robinhood as opposed to other brokerages if you take Vanguard, for example, or you take Schwab or any other sort of exchange?
I think that, well, first, it's hard to actually compare because no brokerage reveals
they don't have that data
to that granularity. I mean, we can track our market share and we sort of like goal on that. And actually the goal is to be #1 in market share across every asset that we offer: equities, options, crypto, margin, which has been growing very, very well. So we don't have a goal on the precise decomposition, but at a high level, one of the things we really track very, very closely is customer retention. So it benefits Robinhood if customers do better over the long run, because our revenue is actually, I mean, if you look at our revenue and divide that by our assets under custody, the total platform assets on the platform, that number has been fairly consistent over the years. It's kind of like in the 2% range, sometimes a little bit higher, sometimes lower. But basically our revenue scales with the assets under management. So long term, we're very aligned for our customers to do well, because if they do well, their account balances increase, our AUM increases, and we're a healthier company.